So our decision was to move ahead with a 25 basis point hike and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes some policy firming may be appropriate.
Markets initially rallied. Now they're selling off. This is really interesting. Let's go over here to the charts. This Bitcoin level is the end-all be-all level for Bitcoin. Look at this. Right up against that, look at the sell candle you're getting. It could go as high as 30. That's always a possibility. But the bottom line is, this is the level where, to me,
Hey guys, welcome back to Let's Talk Crypto. Bitcoin has been in the spotlight more than ever lately, due to the current banking and financial climate around the world. People are increasingly looking for new, secure ways to store wealth and are benefiting from its long-discussed features. Tom Lee from Fundstrat praised how resilient Bitcoin has been in the face of issues with FTX, Signature Bank and Silvergate Capital in 2023, demonstrating its capacity to withstand external challenges. Bitcoin has surged by 63% from its November 2022 price of around $15,500 due to the banking crisis, which began with the downfall of Silicon Valley Bank and UBS taking over Credit Suisse. Unfortunately, Bitcoin failed to reach the $30,000 mark as some expected before the interest rate decision was made. The recent bank failures caused market participants to doubt whether the Federal Reserve was still planning to proceed with their stated policy of tighter monetary conditions. Early on Wednesday, Bitcoin reached a new high of $28,815 after some investors anticipated that the Federal Reserve would stop rate hikes. Unfortunately, their expectations were not met when the Fed denied these requests. The U.S. Federal Reserve has increased the Fed funds rate by 0.25%, leading to a drop in the price of Bitcoin to around $27,030 lately. The recent rate hike from the Fed serves as a reminder that inflation is still a concern. Powell was clear on the FOMC's commitment to bring inflation back to their 2% objective. Yet, in prepared remarks, Powell noted that the events of the past 2 weeks in the banking system could lead to tighter credit conditions for both households and businesses, which would eventually have an impact on the economy. Let's watch a small clip of the FOMC press conference on March 22nd. But before we do, please consider subscribing to our channel, as we bring you daily content on the latest crypto news. And now, let's jump right into the video.
Before discussing today's meeting, let me briefly address recent developments in the banking sector. In the past 2 weeks, serious difficulties at a small number of banks have emerged. History has shown that isolated banking problems, if left unaddressed, can undermine confidence in healthy banks and threaten the ability of the banking system as a whole to play its vital role in supporting the savings and credit needs of households and businesses. That is why, in response to these events, the Federal Reserve, working with the Treasury Department and the FDIC, took decisive actions to protect the U.S. economy and to strengthen public confidence in our banking system. These actions demonstrate that all depositors' savings and the banking system are safe. With the support of the Treasury, the Federal Reserve Board created the Bank Term Funding Program to ensure that banks that hold safe and liquid assets can, if needed, borrow reserves against those assets at par. This program, along with our long-standing discount window, is effectively meeting the unusual funding needs that some banks have faced and makes clear that ample liquidity in the system is available. Our banking system is sound and resilient with strong capital and liquidity. We will continue to closely monitor conditions in the banking system and are prepared to use all of our tools as needed to keep it safe and sound. In addition, we are committed to learning the lessons from this episode and to work to prevent events like this from happening again.
He then turned to the broader economy and monetary policy.
Inflation remains too high and the labor market continues to be very tight. My colleagues and I understand the hardship that high inflation is causing, and we remain strongly committed to bringing inflation back down to our 2% goal. Price stability is the responsibility of the Federal Reserve. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. We believe, however, that events in the banking system over the past 2 weeks are likely to result in tighter credit conditions for households and businesses, which would in turn affect economic outcomes. It is too soon to determine the extent of these effects, and therefore too soon to tell how monetary policy should respond. As a result, We no longer state that we anticipate that ongoing rate increases will be appropriate to quell inflation. Instead, we now anticipate that some additional policy firming may be appropriate. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Just a quick follow-up. I mean, given all of the stress and the uncertainty that you've also alluded to in the statement, how seriously was a pause considered for this meeting?
So we did consider that in the days running up to the meeting, and you see the decision that we made, which I'll say a couple things about. So our decision was to move ahead with a 25 basis point hike and to change our guidance, as I mentioned, from ongoing hikes to some additional hikes, maybe some policy firming may be appropriate. So going forward, as I mentioned, in assessing the need for further hikes, we'll be focused, as always, on the incoming data and the evolving outlook, and in particular on our assessment of the actual and expected effects of credit tightening.
He pointed out that it would be best to use terms such as may and some, as opposed to ongoing, when talking about future rate increases instead of using more definitive terms. A pause in May is looking more likely, and markets initially took this as slightly dovish. However, Powell's statement was viewed by some as being hawkish for focusing on inflation, even during the banking crisis. Pro-trader Gareth Soloway also commented on the Federal Reserve's rate decision and the market's reaction, giving his insight into what to expect next.
We're seeing here, guys, check this out. So here's Jerome Powell. You guys can see him talking behind me. He's giving his press conference. Markets initially rallied. Now they're selling off. And this is really interesting. Let's go over here to the charts. We got to look at some of the charts here. So take a look at the NASDAQ, right? This is the NASDAQ 100 10-minute chart. Initially, we rallied up, and now we're selling off. And the key is this, guys. Number one, the NASDAQ, if we go to the daily chart here, the NASDAQ has rallied over 10% just in the last week or so. Also, look at this candle formation here. This candle here today, if that ends that way, it's a topping tail. That is a sell signal. All right, I'm a big fan of being short the market here. When you have this type of rally going into the Fed decision, it's time to look to take profits. Be careful of Bitcoin. I've talked about that as well, guys. And I've talked about how this Bitcoin level now is actually in major resistance. And I've said this to you guys before. Right? So basically, this Bitcoin level is the end-all be-all level for Bitcoin. It's the most significant level going back to basically the pivots of 2021's bull market at the lows. Look at this. Right up against that, look at the sell candle you're getting. It could go as high as 30. That's always a possibility. But the bottom line is, this is the level where, to me, this is a sell-off ready to happen in risk assets. People are going to go to protection because the Fed is not going to give up on inflation, and that's going to slow the economy. So now all of a sudden things are taking shape. Recession second half, I've been predicting that. You're going to hear more about it. You're going to hear more about stagflation, all of these things. The Fed is not budging on rates. The Fed obviously is trying to sell kind of the calm because of the banking crisis, but this is not a good situation, and markets are starting to recognize that.
Gareth advised caution regarding Bitcoin, as he fears that a sell-off is about to occur. Nevertheless, some analysts were optimistic about Bitcoin's price in the near future, due to the difficulties in the banking sector. Bitcoin, straddling between being the leading risk-on asset in a financial lifeboat in the event of an all-out banking crisis, has benefited from the recent turmoil, and now the prospect that the Fed's tightening could be over, James Lavish, managing partner of Bitcoin Opportunity Fund, expressed to CoinDesk in an email. Ben McMillan, chief investment officer of crypto asset manager IDX Digital Assets, recently commented on the notion that Bitcoin is now being seen as a commodity or hard asset to store value. Without a doubt, Bitcoin has shown remarkable strength during this global crisis involving the banks. However, with inflation yet to be tamed, a pullback could be in store, meaning that it's too uncertain a time right now for any analyst to make more definitive calls. What are your thoughts on this? Will Bitcoin continue to rise, or are we heading for new lows? Let us know in the comments below. If you enjoyed this video, please make sure to give us a like and subscribe. Thank you so much for watching. This is Let's Talk Crypto, and we'll see you in the next video.